In this class, we'll discuss about the features, components, and functions of money market. We know that in any economy there exist two types of market. One is money market, the other one is capital market. Money market is a market for short-term dealings, and capital market deals with the long-term transaction. Money market major instruments of the money markets are like borrowing, bank lending, etc. Bankers, financial institutions, etc. are the components of the money market. Capital markets are the long term, mainly includes like a stock market, then long term development banks, etc. who deals with long term or financial transactions. In this section we will see the meaning, functions and features of the structure and features of the money market. Money market is a place for trading in money and short-term financial assets that are close substitute for money. That is, money market is a place for trading in money, and that trading in money is for mainly deals with the short-term financial asset, and these short-term financial assets may be close substitute for money. Close substitute for money means that it will be equivalent to money, or there won't be any loss of value if we convert it into the cash. That is, these money market instruments are mainly highly liquid, or the loss of money or the loss of cash when we convert into the cash will be very less, or the loss of value when we convert it into cash will be very minimum in the case of the money market instrument, or they are close substitute. The value loss will be sometimes zero in the case of the money market, or full amount we can avail using these instruments in the money market. They are close substitutes for money, and it is a market for short-term funds and short-term money and financial assets, and that they mainly deal with short-term funds, short-term money and short-term financial asset. Close substitute for money denotes any financial asset that can be quickly converted into money with minimum transaction cost and without loss in value. That component is known as the close substitute for money. That is, they denotes any financial assets that can be quickly converted into money with a minimum transaction cost and without loss in value. According to Godfrey Crowther, the money market is a collective name given to the various firms and institutions that deals in various grades of near money. And according one definition is given here. According to Godfrey Crowther, money market is a collective name given to the various firms and institutions. That is, it is a collective name given to the various firms and institutions that deals in the various grades of near money. That who deals with the various grades of near money or close money. These financial institutions will be dealing with the various grades of close money substitute, and the collective name given for these firms and institutions who deals with these various grades of money or close substitutes of money are termed as money market according to Godfrey Crowther. The features of money markets are given here. Some of the important features of the money markets are given in this section. That is, first one, it provides short-term source of fund. That is, it is a fund for normally 1 year duration. Second one, it is an institutional source of working capital to the industry. These funds are mainly used as a working capital for the industry. That is, for meeting the working capital includes the payment of raw materials, wages, etc. are the funds for the working capital of a firm or the industry, and these short-term funds are mainly used as a working capital to the industry. Second one, it is a wholesale market for money. That is, it is a wholesale market for money. Even though it's short-term funds, they are the wholesale market of money. There are large number of participants in the money market, namely central bank, commercial bank, non-bank financial companies, discount houses, acceptance houses. These are the components of the money market. Then there will be another important features are that there will be savers as well as the investors. Then saving people who saves and people who invest money will be there in the money market. Then another feature is that it is not a single market, but it is a collection of market for several instruments that we have seen in the earlier definition, that it is a collective name. It is not a single market. In that market, there are several instruments will be available. Then another one is that it is a need-based market wherein the demand and supply determines the shape of the market. That is, money market is a need-based market and the demand and supply determines the shape of the market. Then objectives of money market are given here. First one, even out the short-term surpluses and or brought out the short-term surpluses and deficiencies in the market. Second one, provide central bank intervention for influencing liquidity in the market. One important player in the money market is central bank, and this central bank provides the this money market provides the facilities for central bank to intervene when in the market. Then second one, they provide short-term funds at a reasonable cost or the price. Another objective is provide short-term funds at a reasonable price and cost to the industry or the firm. Then another one, provide a place for overcoming the short-term deficit in the, that is, these are used for overcoming the short-term deficit in the economy. Then another objective is provide opportunities for short-term investment. It provides the opportunities for short-term investment. Then another objective is promote saving habits of the people. Then another one, they mobilize and utilize the unutilized and underutilized small savings of the savers. That is, this money market utilize and mobilize the unutilized and underutilized savings of the big economy. Then these savings are utilized for the production. They channelize these savings into the production. And another objective is that they provide opportunities, return and liquidity to the saving. Another one, they helps the industry to face financial emergencies by providing the working capital. Then finally, they helps, another objective is to help in the economic development of the country. These are the important objectives of the money market. That is, they provide a mechanism to sort out the problems of deficiencies or surplus in the market. Second one, provide liquidity in the system. They provide short-term funds at a reasonable cost. Then they helps to meet the short-term deficit in the fund. And they provide opportunities for investors. They promote saving habits. They helps to mobilize and utilize the unutilized and underutilized non savings of the people. They channelize to savings. Then they provide opportunities, returns and liquidity to savings. They helps industries to face financial emergency. Then finally, they helps in the economic development. Now the importance of the money markets are given here. The money market plays a vital role in accelerating the rates of economic development of the country. That is, they provide the capital for the investors. Then second one, they provide economic development or they boost the economic development of the country. Then third, the next important importance of the money market is that they helps in the profitable investment for the individual. That is, another one is they provide an important role to the central bank in the economy. And the money market helps the government to borrow short-term funds at a lower rate of interest from the market. That is, borrowings by the government is also made easy. Then another importance is that they helps in the mobilization of funds. Then self-sufficiency of the commercial banks are provided by the money market. Then saving and investment habits of the people will be promoted through the money market. Main components of the money markets are the submarkets include money market, then commercial bill market, acceptance market, treasury bill markets are the components. That is, money market instruments includes the money at cold or short notice, the treasury bill in the treasury, commercial bill, promissory notes. In addition to that, commercial papers, certificates of deposit, bank participation certificate, report instruments. These are the instruments available in the money market. The structure of money market is given here, and structure of Indian money market is given here. Indian money market consists of both organized and unorganized sector. That is, in Indian money market, this is an important question for the exam also. That is, Indian money market consists of both organized and unorganized sector. Organized structure is more systematic and controlled. Whereas the unorganized sector is not under the control of the RBI, whereas the organized sector is under the control of the Reserve Bank of India. And The organized sector consists of the public sector, private sector, banks, foreign banks, financial institutions, etc. And this structure is given in this chart. That is, the Indian money market consists of both organized and unorganized sector and submarket. Also exists in India. Organized sector consists of the Reserve Bank of India, scheduled bank, then lenders, development bank, investment bank, foreign banks, there, etc. Unorganized sectors include indigenous bankers, domestic money lenders, nidhis, chuttis, etc. Submarkets includes the call money market, bill market, treasury market, certificates of deposits, commercial bill market, treasury markets, etc. This is the structure of money market in India. Then features of the Indian money markets are given here. First one, we have already seen there exists both organized and unorganized sector. Indian money market both organized and unorganized sector exists. Second one, it is seasonal in nature. That is, we know that Indian economy is agrarian in nature, and therefore the Indian money market is seasonal in nature, that it mainly depends upon the harvesting seasons or etc. Then another important feature is that in Indian money market, different rate of interest prevails. We know that in India, different banks have different rate of interest, and this is one of the important feature of the Indian money market. Then the control mechanism is also different in India. Organized sector is under the control of the RBI, whereas unorganized sector is not under the control of RBI. Another important feature of the Indian money market is that Indian money market is highly fluctuating over the time. This causes uncertainty and risk in the economy. Then another important feature is that in Indian money market, limited instruments are only available. There exist different types and varieties of instruments in money market in developed economies, but in India, there exists only very few, now the limited number of instrument. First one, therefore the features of the money market instruments are, or the money features of the Indian money markets includes both, it exists both organized and unorganized sector. Second one, it is seasonal in nature. Third one, different rate of interest prevails in Indian money market. Then the control mechanism is also different. That is, for the organized sector, the RBI controls, whereas for the unorganized sector, it is not under the control of RBI. Indian money market is highly fluctuating, and therefore the risk and uncertainty is very high. And another important feature of Indian money market is that in Indian money market, the number of instruments is very limited. Then the drawbacks of Indian money markets are given here. Some of the drawbacks of Indian money markets are: first one, lack of proper coordination. That is, there is no coordination between the organized and unorganized sector in India. Second one, ineffective interest rate mechanism. We know that the interest rate mechanism is not effective, or it is different in different institutions. Therefore, the interest rate mechanism is ineffective in Indian situation. Then scarcity of resources due to the limited instruments and other limited number of institutions. The resources are also scarce in Indian money market. Then another one, inappropriate instruments. Even though the number of instruments are limited, the instruments available also are inappropriate according to the Indian condition. Then another important limitation is that there exists shortage of the commercial bill. Then another one is insufficient banking system. The banking system that prevails in Indian money market or in Indian financial system is also insufficient, and insufficient dealers. The number of dealers in Indian money market is also very limited. These are some of the important drawbacks. The drawbacks includes lack of proper coordination, ineffective interest rate mechanism, scarcity of resources, inappropriate instrument, shortage of commercial bills, inefficient banking system, and insufficient dealers. These are the some of the limitations of the money market. So far we have discussed what is money market, what are the features of money market, what are the objectives of money market, then what are the importance of money market, then money market compositions, money market instruments, then structure of Indian money market, then features of Indian money market, and drawbacks of the Indian money market. This about the Indian the structure and features of the Indian money market.